Hello and welcome back to our final video for chapter 3. We've been talking about job order costing, specifically how costs flow through the accounting system, as well as external reporting, looking at underapplied and overapplied overhead, calculating that cost of goods manufactured. So in this video, we're going to go over problem 13 in your study guide, and we're also going to go over problem 14 in your study guide. So problem 13 deals with how costs flow, right? Putting costs in one account and then moving them to another account. How do we make that happen? Well, guess what? We're going to use journal entries. Um, and again, I love T accounts. They're sexy. They're easy to see what's going on. Remember, left side debit side, right side credit side. Okay. So if you'll notice here, the first problem we have, number A, or letter A rather, says 94,000 in raw materials was purchased for cash. Okay. So let's think about this. Physically, we're taking cash, we're giving it to a supplier, let's say check. Check's a lot better. We're writing out a check, which is technically cash. We send it to the supplier, and that supplier sends us raw materials, right? Remember, direct materials, raw materials, virtually the same thing, right? Raw materials are material that becomes an integral part of our final product. So that could be a radio. If we're making cars, got to buy a radio so I can put it into the car. I go to Bose or Pioneer or Sony, whoever, say, hey, I need 100,000 car stereos. No problem. So what we need to do is show that physical flow of material and cash and whatnot. We need to show that in terms of accounting. Super easy. The problem tells us everything we need to know. Okay, so there's no guessing, no real interpreting, only analyzing. If that makes sense. Interpreting. Yeah, because interpreting, you kind of got to guess, right? Well, it could be this, it could be that. No. With all this information, we got to analyze it. Number one, what's the dollar amount? $94,000. What two accounts are hit? Well, it tells me in the sentence, raw materials is one account, the cash account is the other account. So what do I got to do? Well, first thing we should do is we need to show that raw materials account is increasing. So what I'm going to do here, and bear with me, I don't know if I mentioned this, when it comes to like Excel charts and things like that, I'm really anal, so just bear with me. Okay, so raw materials is an asset, so this is the raw materials account, and I'm just going to say right here A, because it's an asset account. Okay, now why did I put that? Well, if you remember in a prior video, I said assets increase with a debit, decrease with a credit. So what that means is we need, and again, this is the T account right here. You can kind of see a T account, quasi, right? We're going to put a debit of $94,000 to raw materials. Now, the next account we have, what's cash? Okay, the cash account. The cash is an asset account, so I'm going to put an A. Okay, remember, and this is our T account. Okay, the line that underlines cash, that's the top bar, and then the side thing's going to be our vertical bar. Okay, so that's how we got the T. The left side is the credit side, right side's the debit side. Cash is an asset. Assets always increase with a debit, and they always decrease with a credit. So guess what I'm going to do? $94,000 credit entry to cash. And let's move it over so it looks a little bit more aesthetically pleasing. Okay, so let's look at the second one. Raw materials were used in production. Of this amount, $78,000 was for direct materials. The remainder was for indirect materials. Okay, easy peasy, right? Super duper easy. We got 3 accounts here that we have to deal with. Well, wait a minute. You said there's no interpretation. I only see 2 accounts. Raw materials being one of them, direct materials being the other one. Or let me rephrase that. Let's back up. Pump the brakes here. I only see 1 account, raw materials. Well, what do I do with direct materials and what I do with indirect materials? So we need to think back to the lecture, and we need to think how those costs flow, right? Remember, all direct costs flow directly to the work in process account. The indirect costs flow to the manufacturing overhead. So the first thing we're going to do is we're going to say, okay, we need to get $78,000 of material out of raw materials, right? It's leaving raw materials, it's going to another account, okay? In your mind, think about it this way. And if you remember the lecture video, kind of gave you this mental image of, okay, we have material leaving the supply area, and it's going to the shop floor, right? That shop floor represents direct material. And then we said over in the corner we have a little office, and that little office area that we have, that represents the manufacturing overhead, and that's where we put all our indirects. Okay, so if you can visualize that physically moving, we're doing the same exact thing here, just in accounting words, right? So the first account is raw materials, right? Second account that we need to use is going to be WIP, work in process. Excuse me. The third account we need to use, and I'm just hitting the center so I can get in the center of this little box. The center is MOH, manufacturing overhead. Okay, how much raw material is, how much raw material is leaving? I know I'm a nerd, so I'm envisioning everybody said 89,000 is leaving. That is correct. $89,000 is leaving. Move it over here to make it look nice. Okay. Raw materials is an asset, and I'm going to put an A there. Remember, we increase an asset with the debit. We decrease an asset with the credit, and that's why it's on the left side here. Let me do this here real quick just to make it a little more. No, that won't work. Okay, we'll just work with it. Okay, so here's the T account for the WIP account, right? WIP, or work in process, is also an asset account. So what do I need to do? Hopefully you're saying, well, you said it about 10 times already. I'm getting sick of hearing you talk about it. Assets increase with the debit, decrease with the credit. So since it's an asset account, it's going to increase. I got to increase WIP. Good. We need a debit entry. For how much? Well, the problem tells us 78,000 of the 89,000 was direct material. So we need a debit entry for $78,000. Okay? Now, manufacturing overhead. Remember, this was that goofy account. We said the left side was the actual side. The right side was the applied side. The right side was the applied side, excuse me. So this is an actual, oh, yeah. So we need to debit manufacturing overhead for the difference. And that's, oh, excuse me, sorry, I got the hiccups, 11,000, okay? So since the left side of manufacturing overhead is what was actually incurred, we actually used $11,000 of indirect material, okay? So that's the journal entry and T account form for B. Now let's look at C. C is very, very, very similar to B. Okay? So let's see what happened. Total labor wages, 132 grand, were incurred and paid. When you see something was paid right off the bat, you know cash. I gotta hit my cash account. Okay? They break down the 132,000. 112,000 was direct labor. The remainder was indirect labor. Okay? So, the first thing we got to recognize is what counts are hit. Well, right off the bat, and I saw this in letter B, right off the bat, I know I have to debit WIP and I have to debit manufacturing overhead for the actual, right? By the way, we'll keep going. I want to come back and revisit B for a second. All right. So, what are we going to do in number C? Okay, super simple, right? So the first count we have is WIP, right? How do we increase an asset? We increase an asset with a debit, we decrease an asset with a credit, okay? I made a mistake here, I got confused. We'll revisit B when we're done. But let's keep working here. So increase an asset with a debit, decrease an asset with a credit. So what is the debit amount for WIP? Well, it's 112,000. Why is it 112,000? And I'm hoping you said, oh, that's because it's the direct costs, okay? So the MOH, that's the next thing we need to hit. The manufacturing overhead. The left side, the debit side, is what is applied, right? How much did we apply? Well, the difference between 132,000 and 112,000 is 11,000. So we need to debit manufacturing overhead for 11,000. And what we're saying is that, hey, we actually incurred 11,000 for manufacturing overhead in the form of direct labor. Now, what's my third account? Well, you see paid right off the bat, it's cash. Cash is an asset. Again, we increase an asset with a debit, we decrease an asset with a credit. Okay? So my cash is going up, I need to debit it. How much, or I'm sorry, cash is going down, I need to credit it, right? How much do I credit it for? The total, 132. Okay? So again, excuse me, asset increases with the debit and asset decreases with the credit. Okay, so let's look at D. Excuse me, let's look at D. Additional manufacturing overhead cost of $143,000 was incurred and paid. Okay, so what this means is that we incurred overhead and we paid these costs. What are we talking about here? We're talking about all the indirect costs. rent for the manufacturing plant, utilities, indirect um, property taxes, right? Any security that kind of guards the manufacturing facilities. Those are all our indirect costs. Okay, so what we need to do is recognize that, hey, we need to hit MOH here. Okay, we also need to recognize that, hey, we paid these expenses. We paid the water bill, we paid the electricity bill, we paid the rent, right? We paid the indirect labor of the guards. Okay, so since we paid it, we're going to hit cash. Right off the bat, we're hitting cash. Okay, so what's happening here? Well, manufacturing overhead, again, is an asset account. We're going to, okay, we debit what we actually incur. We actually incurred $143,000 of expense for manufacturing overhead. We're going to credit cash. Why am I crediting cash? Because again, cash is an asset. Assets increase with a debit, decrease with a credit. So $143,000, oh sorry, $143,000 is the credit to cash. Okay, manufacturing overhead of $152,000 was applied to production using the company's predetermined overhead rate. Guess what? They already calculated the predetermined overhead rate. They already multiplied that predetermined overhead rate by the cost base, right? Or the allocation base. All we got to do is worry about the journal, okay? Now, obviously we're going to hit, oh, sorry. Okay, so obviously we're going to hit manufacturing overhead. We have to, right? Remember, manufacturing overhead, the left side is what we actually incurred. The right side is what we apply. So we need a debit entry, which is the left side of the T account, left side over here of the T account of for the entry. Okay, so I'm going to put $152,000 here. So what we're doing is we're actually saying, hey, we're keeping track of everything we actually incur on the left side of the transaction, which is the $143,000 from D, the $11,000 from C, and okay, the other $11,000 from the other $11,000 from B. Okay, so all that is on the left side. We're applying it to WIP. So how do we do that? Well, remember, we're increasing WIP. You already know this, and you know what's going to come out of my mouth. WIP is an asset. You increase an asset with a debit. So I need to debit WIP for that 152 or that $152,000. Okay, now F says all of the goods in process, or excuse me, all of the jobs in process or the work in process at the end of the month are completed. Okay, so here's what I want to do. How much over here, right here, and this is just, you don't have to put this in your study guide, this is for me, I just want to show you. Okay, so if I take my direct material, right, I added direct material in B. Okay, so let's revisit B for a second. How do you increase an asset with a debit? So I need a debit entry to WIP for B. Okay, same thing for raw materials. Raw materials is leaving, so I need to credit that. Okay, there we go. So now we're right. All right. So direct materials that was applied to WIP is 78,000. Okay. Direct labor that was applied to the WIP account is from Part C, and that's 112,000. Okay. And the MOH, which was applied to WIP, is 152,000. Okay. So if I add all these up, that's $342,000 of cost. Okay. Let's run it through the calculator just to double check my math, right? 78,000 plus 112,000 plus 152,000. Yep, $342,000. So what this is saying, and I'm going to put this right up here. Again, you don't have to put it here. This is just for visual for you. Okay, so this whole amount equals $342,000. This amount is leaving WIP. Okay, it's going to the finished goods account. So what do I do? Well, I know my WIP account, which is an asset. By the way, spoiler alert, pretty much all these are asset accounts. Needs to be moved to the finished goods account. I'm just going to abbreviate as FG for finished goods. How do I get it out of WIP and into finished goods? We already know, because I said it about 1 billion times and you probably just sped through that part. WIP or assets are increased with a debit, decreased with a credit. So I'm going to credit WIP for $342,000. Finished goods, again, is a asset account. I increase it with a debit of $342,000. Okay. All of the jobs were shipped to customers. Okay. So that means that once I get it, once it's on that loading dock, that's the finished goods area, right? Think of that as the finished goods account. It's sent to customers. So it needs to, those costs need to leave the balance sheet. Say that again because that's important. Those costs need to leave the balance sheet and they need to show up on the income statement. Okay, say it one more time because it's really important that you understand. We're taking an asset, finished goods, we're now recognizing the expense. Those finished goods, that cost, leaves the balance sheet, shows up on the income statement as a cost of goods sold. Okay, those are the two accounts we need. So I need a finished goods account, which we know is an asset, and I need a cost of goods sold account, and I'm going to abbreviate that as COGS, COGS, cost of goods sold. This is an expense account. Oh, don't do that. There we go. This is an expense account. Now, how do we increase an asset? With a debit. How do we decrease an asset? Hopefully you said credit, right? Now, what do we do in the finished goods? Well, we're selling something, so we need to decrease our finished goods, right? Everything that was in finished goods leaves the finished goods account and is sold. So I need to credit that for $342,000. Now, you're going to love this. Remember how I kept saying assets, you increase with a debit, decrease it with a credit, right? Probably sick of hearing that. Guess what? You're probably going to have to learn something new for expenses, right? How do I increase an expense? How do I decrease expense? It is the same exact way we do an asset, okay? So regardless if it's an asset or an expense, we increase them with debits, we decrease them with credits. We are increasing our cost of goods sold, right? Because we are adding that cost to the cost of goods sold on the income statement. So I'm going to debit this for $342,000. Okay? Now the last part says, hey, any under or over applied during the period was close to cost of goods sold. Okay? So Okay, so let's do this. Maybe. Okay, so I'm just going to draw the manufacturing overhead account. Okay. Okay, so remember, this is actual, which is the left side or the debit side. The credit side is what we applied. APP. Okay, so we already know that we applied, and let's look at E. E is where we applied. Okay, we applied $152,000. That means $152,000 left WIP, or I'm sorry, left manufacturing overhead and went into WIP. So now we got to figure out how much did we actually incur. So I'm going to abbreviate and say INM, IND. Indirect material, indirect labor, and I'm just going to say other. Okay, because we had 3 journal entries where we hit our manufacturing overhead. So I'm going to scroll back up to B, right? 11,000 was our MOH. We applied 11,000 to manufacturing overhead. I'm sorry, I'm using applied here too much. We incurred $11,000 of actual overhead, so we need to add that to the left side. So there's my 11,000. Okay, indirect labor, this comes from C, right? C, we see that, hey, for manufacturing overhead, we actually added $11,000. So I'm going to go ahead and put that in there. Okay, and then the next one was our other. That was the letter D. Hey, additional overhead costs of $143,000 were incurred and paid. So we need to put this down here. Okay, what I did here was I just took all the transactions that we did and I put them into one T account for manufacturing overhead to make it a little easier for us to see. Okay, so I'm going to put a line here. Okay, we have a $152,000 balance, or $152,000 on the debit side. On the credit side, how much do we have? Well, let's see, we have that 143 plus the 11,000 plus the other 11,000 gives me 165,000. I'm so sorry, you guys can. My jerk of a dog is barking. Okay, so right now I need to look at this account and I need to say, did I under apply or did I over apply? And that's very, very simple. That's very, very simple to see. We actually incurred $165,000 in overhead, but we only applied $152,000, right? So the difference there, the difference should be 22 grand, right? Sorry, 13,000. Yeah, 13,000. Excuse me. So what that means is that we didn't allocate enough expense. Okay? How do we fix that? Well, the problem tells us that we're gonna close everything to cost of goods sold, right? We're gonna use the first method we talked about in a lecture video. We're not using the second. We allocate it, right, to all the inventory accounts. Nope, we ain't doing that. We're gonna close it to cost of goods sold. So if we look at this right here, we can do it one of two ways. Let's do it the easy way first. Okay? The easy way first says that, hold on, bear with me, I'm sorry. Okay, here we go. Okay, the easy way says, well, I know my cost of goods are too low. I need to get them up, right? How do I increase my cost of goods sold? Well, remember, we know that cost of goods sold is an expense. It behaves just like an asset account, meaning in order to increase it, I need to debit it. Why am I getting this funky sign? There we go. Okay, so expenses are increased with a debit, so that means I need to increase my expenses. Okay, so my manufacturing overhead then by default has to be a credit. Well, wait a minute, why'd you say that? Debits and credits always have to equal. Okay, so if I know that this cost of goods sold is an expense, I underapplied, I need to increase that, I increase an expense with a debit. This manufacturing overhead is easy to figure out. It's a credit for $13,000. Okay, now let's look at the manufacturing overhead account that I have down here, right? We have too much actual, not enough applied. Well, to fix that, to get this right side to equal 152,000, I have to add 13,000, and that'll make both sides equal. Okay, so that's how you know this will be a credit. That's how you know this is a credit. Okay, so that's really what you want to ask yourself when you look at the two sides of the T account. Okay, well, which side's smaller or which side's bigger, depending on if you underapplied or overapplied, and that's the side you need to hit to get it to where it needs to be. How do you know that? Well, you know, manufacturing overhead, you should have applied $165,000, right? You should have. You didn't. Okay, so you have to credit this 13,000 to bring it up. Okay, what if it was the other way? What if these were switched and you you overapplied? Then you would do the same thing. You would have to credit MOH, you'd have to debit MOH to bring it back to where it needs to be. Okay, both sides have to be equal at the end of the day. Okay, since it's accounting, we don't subtract, we either debit or credit. Okay, I'm sure that was probably as clear as mud. After you watch it, if you're still confused, you just text me, say, hey, you know what, still need a little bit more, still not understanding it. Not a problem. All right, so number 14. Number 14 is pretty easy. We got to do a cost of goods manufactured and a cost of goods sold statement. Okay, remember what I said in the lecture video, right? We take the beginning, we add whatever we purchased, that gives us what's available. Then we subtract our ending balance, that tells us what was used. Okay, so this is and I pretty much created the cost of goods manufactured statement here for you. Okay, excuse me. So what I'm gonna do is I'm just gonna not go up and look at the numbers I have here in front of me. I'm just gonna fill this thing out and kind of explain it as we go. Okay, so the first thing we got to get is our direct materials. I need to figure out how many direct materials did I use in production, right? You might say, hey, go back to the other problem. Well, these are two different problems. That'd be too easy if I kept all the information the same. So what is our beginning raw materials inventory? Well, the beginning raw materials inventory is $12,000. Okay, I just took that from the information given. I need to then add my purchases. How much raw materials did I purchase? Again, the problem is going to tell us that. Problem tells us we purchased 30,000 in raw materials. Great. How much do we have available? Well, if I take 30,000 plus 12,000, that's 42,000. Okay, so that's the raw materials that I have available. Now, how much raw materials did I use? Easy. Easy to figure out because I'm going to take what's available, the 42,000, and I'm going to subtract out the ending raw materials inventory. Ending raw materials inventory is 18,000. So how much did I use? Well, I must have used $24,000 in raw materials. Now hold on. We need direct materials, okay? When we're looking at raw materials, what comes out of raw materials? Everything. Direct materials and indirect materials. So to figure out how much direct material was taken out of raw materials, we then need to know, or they better tell us somewhere, exactly how much indirect materials was actually incurred in the job. So if we look, the second post or the second line down says indirect materials included in manufacturing overhead was $5,000. That means that we actually incurred $5,000 of indirect materials, okay? So of the 42,000 available, we used 18,000, or we used 24,000 of it. Of this 24,000, 5,000 of it was considered indirect materials. So that means that taking the 24,000 minus the 5,000, I have 19,000. Okay? Direct labor. How much direct labor was used? Easy peasy lemon squeezy. Why? Because they tell us, hey, here's your direct labor. Direct labor in this problem is $58,000. Okay? Manufacturing overhead applied to WIP. How much is that? Guess what? That's a given. Hey, manufacturing overhead applied to WIP is $84,000. Okay, good. So at this point, we have everything that was added to WIP, right? We have our direct materials, we have our direct labor, and we have our manufacturing overhead applied. So we now have our total manufacturing cost. Total manufacturing cost is $161,000 if you add those three up. So now what we want to figure out is what is the cost of goods manufactured, meaning how much of inventory or how much of WIP inventory actually was completed. How do we figure that out? We figure that out by determining how much actually left WIP and went into the finished goods account. Easy. I take my beginning, I add what was added to that account during the period, I subtract out the ending balance. That's how I get the amount that was used. So right here we already have the amount that was added to that manufacturing overhead account. To what we added to that account, I need to take into account the beginning balance. What's the beginning balance? It's given to us as $56,000. We now have, hey, here's how much is available of WIP. That's $217,000. How did I get that? I took the I took the 161 and added the 56,000 to it. Now I need to figure out, since I have $217,000 of cost still sitting in WIP, how much of that leaves WIP? Well, in order to figure that out, I need to subtract out the ending balance. Okay? That ending balance of WIP is given to us as $65,000. So I'm going to subtract out $65,000. $217,000 of WIP available minus what's left in the WIP account, $65,000, gives me $152,000. So that must mean that $152,000 left WIP went into finished goods. We just calculated the cost of goods manufactured. Now let's look at the cost of goods sold. I'm going to say it again. Hopefully you wrote it down. Remember, how do we figure out how much was used? Easy. What's your beginning? Or you take your beginning, you add, plus, add, addition, whatever the costs that were put into that account. Those two added together sum up to what's available within the account. You subtract out the ending balance, that tells you how much was used. We need to figure out what are the cost of goods sold, meaning how much cost left finished goods and went into the cost of goods sold on the income statement. Very easy. What's my beginning balance of WIP? What's my beginning balance of finished goods? The beginning balance of finished goods is $35,000. Is $35,000. So right here, I'm going to plug in my $35,000. Okay. I need to add the cost of goods manufactured. I already figured that out. I figured that out in the first part of the problem. So that's the 152,000. I add those two together. Guess what that gives me? That gives me the cost of goods that are available to be sold. That ends up being 187. Okay? Then we need to deduct the finished goods inventory account. That amount is given to us. That is $42,000. When I subtract costs available for sale less the ending balance of finished goods, I get $145,000. That is my unadjusted cost of goods sold. Now, in the problem they said, oh, by the way, you underapplied manufacturing overhead. You applied 84,000, but we still have 4,000 outstanding. Okay, meaning the left side of the manufacturing overhead account says 88,000. The applied side says 84,000, right? So we under applied. Okay, we didn't apply enough. So what do I need to do? Well, I need to add that under applied overhead to my cost of goods sold. More specifically, I need to add that to the unadjusted cost of goods sold. So I'm going to add $4,000 to this, and I find out that my adjusted cost of goods sold, accounting for me not actually applying enough overhead, ends up being $149,000. Okay? Notice I put a little note down here, kind of as a reminder for you. Hey, if MOH is over applied, we applied too much, so we need to subtract the over applied overhead amount. Okay? So that's how you do those two problems. Again, if you have any difficulty, if my instructions or my walkthrough was as clear as mud, don't stress. Text me. Not a problem. We could set up a live chat session and we can do another problem, do whatever. Okay? Get more practice and we can work through them together. Okay? So thanks for tuning in. Next week is chapter 4. Chapter 4 deals with process costing. Okay, so we're going to learn another costing technique. So again, thanks for tuning in, and we'll see you next week.